The Federal Reserve just announced a 25-point basis reduction. For you to buy a home, what does that actually really mean for you? We got 5 things here just quickly we're going to touch on. So, number one, and I'm reading this. I want you to know I'm reading this because I took some notes. So forgive the glasses and the look away. But mortgage rates don't always move in lockstep to what the Federal Reserve does. Most people think that if the Federal Reserve drops 25 basis points, that means that your mortgage rate are going to drop down 25, based upon a quarter of a point. Meaning that if it was at 7, it's now going to be at 6 3/4. That's not the case. That's not what that means. As a matter of fact, if you either knew, been told, and or paid attention, you will see that before the Federal Reserve actually announced the 25 basis points, that it was so anticipated that mortgage rates had already started to come down. Mortgage rates actually are at low for the year, actually low for the last 3 years, currently, before the announcement. That's one of those buy the rumor, sell the news type things. Okay, what that federal cut does is it makes the money cheaper that the banks use, and that goes to the bond market and other instruments. Doesn't have necessarily, well, it doesn't have anything specifically to do with the mortgage rates. So understand that lowering the borrowing costs, obviously, we get to that point, improves affordability. But the perception is that the rates drop and your mortgage payments just could just go way down. But the truth of the matter is, believe it or not, on a 30-year fixed mortgage, if it goes down, say, a quarter of a point, quarter of a percent, well, we're talking about on, say, a $500,000 loan, we're talking 75 to $100 a month, less a month. Now, is that something? Absolutely. Does that help people? Absolutely. But is that like, I don't know, a reason not to buy a home because it's 75 or $100 more a month? That's something you'd have to tell me. But it's not going to all of a sudden be $1,000, $2,000 a month less in buying your home. One thing that's affected though are adjustable rate loans. Adjustable rate loans and HELOCs. HELOCs obviously for refinancing and stuff. Those rates tend to react a little bit faster and in step, some with a bias points cut. Unlike the fixed rate loans, which most of the public, if possible, would prefer that 30-year fixed loan, 15-year fixed loan, just a fixed loan, so you always know what your payment's going to be. In a lot of cases, though, the adjustable makes sense. We'll talk about that on another program. Now, understand this though: lowering the rates can up the demand, which means the prices could go up on homes. Now, just think, it was just a few months back, 6 months, year, whatever the case may be, the inventory was so low that if something came on the market that was priced really well, you still, in this type of a market, you still were overbidding to get in. You were waiving appraisals. You were waiving physical inspections. You had stuff that you were doing because there weren't any houses for sale. So what happens now? What happens if the rates come down to a point to where people like yourself have been waiting? You've been waiting for the prices to come down. As soon as the prices come down, man, I'm jumping in the market. Well, guess what? You're not the only person thinking that way. There's a lot of you. There's a lot of you, man. There's a lot of you. And when that happens, if the inventory doesn't increase drastically, guess what begins to happen? The homes sell faster. You're generally overbidding maybe, and or the prices go up because people are trying to get in with this better interest rate, with these better payments. You see what I'm saying? That's a key. That's something important to really remember. And obviously, you get a little bit less interest rate, but do you pay more for the property? It's just something to think about. Lastly, that I would at least want to talk about. At the end of the day, buying a home is still about your whole financial picture, your credit scores, your down payment, your debt to income ratio, if you've got other loans, just how you look on paper beside the interest rate will help you as far as what type of loans you're able to get. Can you get something with a minimum down payment if you choose? Can you get something where you don't have PMI if you choose? Can you get something that is you buy the rate down or just in general puts you in a better financial position once you own the home? See, these are all the things that you really want to know because it's not about either what you buy it for. What it's about is how can you maintain yourself in your monthly obligations with the property. That's what matters. That's what matters, regardless of interest rates or anything else. Can you make the monthly payment? If you can make the monthly payment and be comfortable with the home that you're in, then your decision, obviously, at that point, it should be to purchase the home. Of course, assuming the home has the stuff that you're looking for, and it's in a good shape. All of those things, of course. But when you're making your financial decision, in my opinion, should not be, well, the rate's at 7%, so I got to wait for it to get to 6. What if it never gets to 6? Or what if by the time it gets to 6, what if the houses are 10 or 15% more than what it would have been for you to buy at 7% and get it at that rate? If you don't think that can happen, just rewind a couple of months ago. Just rewind 6, 7, 8, 9, 10 months ago. So these are things to keep in mind as you're looking to purchase your home. Hopefully these are some tips to help you understand a little bit better of what it means as the Federal Reserve drops their basis points. And, they say that there's going to be more cuts. How many? How long it takes? Who knows? But remember that last point is that unless the inventory increases quite a bit, the lower that interest rate goes, the more people can afford it, the more people are going to jump in while they can afford it. You want to make sure that you get your piece of the rock right now, ready fast, today.